When it comes to the actual environment, we're in a tactical and in a downtrend environment. So it is flipping between bottom and downtrend because so the actual real top that we measured from our system perspective was actually on July 16th. That was the actual top. What you've seen here was actually a paper-driven top. So it still remains to be seen how this plays out, but the first innings of what is currently happening seems to be more of a February type of echo and not a May type of echo 2024. Because you have rising liquidity and the large sustained market activity. Bitcoin being a transfer mechanism in liquidity, a canary in the coal mine for liquidity, right? It's going to do very well as it expects rate cuts to happen. As soon as rate cuts actually happen and they start accelerating, you're not going to see outperformance in this asset class.
Jan Allemann, co-founder of Glassnode and SwissBlock, studied mechanical engineering at Georgia Tech and worked at Ferrari before moving into finance.
With roots in Brazil and Switzerland, he combines engineering expertise with a passion for economic systems to offer insights into crypto and financial markets.
So you want Bitcoin to be stable. I think there's no, at least we've never seen a alt season where you didn't have a stable and a basically strong Bitcoin, right? You don't want the explosive Bitcoin like we've had over the last couple of years, but it needs to be stable. And that is important to understand, especially on an aggregated level, because that is a precursor to the alt season. So whenever you have a combination of strength in Ethereum with these things firing off, especially on an aggregated level, that is exactly how we define alt season.
Hey guys, welcome back to Less Noise, More Signal. Today, I'm honored to have Yann with us. Yann is a fellow Swiss companion, I'd say. And yeah, it's great to have you with us, Yann.
Thanks for having me.
Great. Yeah, I came across you just a couple of weeks ago, actually. I think you guys have started to be a bit more vocal yourself. And I guess also with the company SwissBlock. You have very interesting frameworks, I'd argue, to figure out where are we in the current market cycle, how to assess is capital rotation happening, what about Bitcoin and its liquidity picture and stuff. So very, very interesting. And it just dawned to me, or I was told by somebody that you're also connected to Glassnode, which is a household name in crypto. So maybe if you could give an introduction to yourself, but then also about SwissBlock and Glassnode and where the connection is, this would be great.
Absolutely. Yeah. So actually, it all really started out about 10 years ago when we first heard about Bitcoin. We always came at it from a systematic trading perspective, right? So we were always interested in understanding complex systems, how the global macro environment works, right? Like how does liquidity move through the system? How do pricing mechanisms define how things get priced, how demand and supply works, all of these things. And it just happened that a good friend of mine from university basically mentioned the story about Mt. Gox in Bitcoin. And that, like for many other people, kind of was the beginning of this rabbit hole that then became a vocation and a life's work pretty much, right? And what basically happened during those years was we very quickly understood that this is something different because it was basically scarce, right? Which now it's become more of a household kind of word. But back then, scarcity in the financial context, especially on when you talk about a copy paste and basically marginal cost zero for any value that you generate on the internet, was not necessarily a very well understood concept. That has obviously evolved over the years. I think people have understood that cryptography and kind of stonewalling value around certain concepts, if it's, strong communities or value propositions, it's a much more well understood concept. And back then we really saw it as something very different. And we understood very quickly as well that it was 80% similar to other things because it traded like an asset. There was exchanges, there was an order book, there's a bid and an ask price, but it fundamentally was also very different in very key ways, right? One, with the on-chain component that was basically back then just a faucet of information. And as well, this idea that it was basically 24/7, that it was basically never sleep, which for good or for bad is a property of the system as well. And this basically prompted us to basically look at it from three different angles. One, clearly the analytics and understanding the actual framework, which is from a trading and risk management perspective, that led us down the rabbit hole of creating systematic strategies, which is now what we call SwissBlock. We had Glassnode, which was the structural fundamental understanding of the system, tapping into basically the real way of data and how it interconnects and how it actually allowed us to kind of parameterize and understand how the system evolves, grows, contracts, and kind of like understanding the economy versus the financial markets, right? Which sometimes are things that go together, but many times actually diverge. Similar type of dynamic. And the third pillar was basically around taxes and moving money in and out of the crypto system. Because it turns out that when we made our first money, we thought that it was just going to be, that was the hardest part, and that moving it into the financial system was going to be straightforward and easy. Turns out that that's not the case. So we actually built systems around really being able to prove up to 99% where money was made, how we were able to basically create the wealth that we were trying to move into the banking system. And that is now what we call cents. So basically we have Glassnode, SwissBlock, and cents. And those are basically the core pillars that we see as fundamental from an infrastructure perspective to fully understand, act upon, and also capitalize on the ecosystem.
Okay, I see. Very interesting. I didn't know about cents. So that's something I want to check out for sure, because I know that's a hassle, to get money from the crypto system back into the traditional system, so to say. And if you have tools to better prove the capital flows and where everything has come from and how you made these returns and stuff, that's definitely something which is of great help. I would like to stick to the SwissBlock framework though. As I understand, you said systematic strategies that you've developed in order to, I guess, trade, invest into crypto the right way, so to say. Maybe let's start there. I don't know, how are these systematic strategies, or the way you called it, how are they devised, or how did you come up with them?
Yeah, so just from a background perspective as well. So I'm a mechanical engineer by trade, and I have basically co-founded SwissBlock with 4 other people, 4 absolute geniuses when it comes to tech, basically the infrastructure side, and also the creation of the algorithms, right? So I'm just fortunate enough to be able to be exposed for a very long period of time to people that are truly very deep in these different topics. But what we basically focused on early on was basically trying to develop filters and algorithms that help us basically measure or define trends. Because at the end, from the beginning, we realized fairly quickly that Bitcoin was basically trading or acting similar to currencies, right? So fiat. The only difference was that it was acting like fiat, but with maybe 10 times more volatility, right? Sometimes even 20 times, depending on the periods, especially in sell-offs. So we understood that even though I think, kind of stat art strategies and, kind of absolute value strategies are very valuable, the biggest asymmetric opportunities were in capturing the trends when they were truly there. So that was a 10-year long, basically, process, right? To where we are today.
What if you could lower your tax bill and stack Bitcoin at the same time? Well, by mining Bitcoin with Blockware, you can. New tax guidelines from the Big Beautiful Bill allow American miners to write off 100% of the cost of their mining hardware in a single tax year. That's right, a 100% write-off. If you have $100,000 in capital gains or income, you can purchase $100,000 worth of miners and offset it entirely. Blockware's mining as a service solution enables you to start mining Bitcoin right now without lifting a finger. Blockware handles everything from securing the miners to sourcing low-cost power to configuring the mining pool. They do it all. You get to stack Bitcoin at a discount every single day, while also saving big time when tax season hits. Get started today by going to mining.blockwaresolutions.com/LNMS. Again, that's mining.blockwaresolutions.com/LNMS. Hey guys, I just wanted to let you know I published a new book, The Bitcoin Enlightenment, co-written with my buddy Daniel and none other than Mexican billionaire Ricardo Salinas. It's a deep dive into the monetary system and its future. In it, we make the type of connections that go beyond what you'll hear from your average Bitcoiner, MMT advocate, or macro pundit. So grab your copy on Amazon today. You'll find the link in the show notes. And now on to today's show. And from what I'm hearing, because that's what I'm hearing a lot from critics, even like people who look at it through an investor or a trader's lens, they're just telling me, well, it's all chaotic. It's all random with these digital assets. How do I value them? How can I even hold them securely and stuff, in that sense. But you're telling me that you sort of detected or just, found some high level patterns that exist in digital assets, right? And that make it worthwhile to systematize and then trade along these sort of patterns that you discovered. Is that correct? And then also, if so, maybe can you shed some light on some of these patterns that maybe some people might not be familiar with?
Yeah. So I think to understand it fundamentally, we need to take a step back. And what we discovered basically over the years is that what it truly comes down to is understanding what Bitcoin is through the lens of liquidity. This is also, for those of you that have maybe listened to some of our webinars together with Willy Woo and Henrik Zeberg, there's a fundamental need to understand liquidity. And the reason for this is that Bitcoin, at the end of the day, is a canary in the coal mine for liquidity. So it's basically a liquidity transfer mechanism. And what that basically means is that it's super sensitive to changes in expectations of liquidity in the future. Okay. So you've probably broadly heard this concept of M2, people kind of shifting and overlapping M2 with Bitcoin. That's basically what they're attempting to make clear. Obviously, I think it's unfortunately not as simple as just overlapping the two things. I think there's mechanical and idiosyncratic reasons that make that true, but it really starts from that perspective. So understanding liquidity, understanding how liquidity flows in and out of the system and how that goes from Bitcoin into Ethereum, large, mid, and small caps is basically the fundamental piece. Everything after that is a consequence of that understanding. And then you realize that shifts in that expectation of liquidity or shifts in the way that money moves in and out of the system create massive asymmetries, right? Because you have a potential mispricing of the asset, like we had with Ethereum as the most recent example, where basically the opportunity cost of not holding Ethereum increased over time the higher Bitcoin went without Ethereum really following, right? And you could have actually already seen that with some of the things that we're tracking. I'll maybe showcase some of those in a second. We saw that already fairly quickly in March and April, that there was a shift in the way that things were being, in the way that they were being handled on chain. And then what basically was the crux was basically Tom Lee coming out and actually giving it a narrative, giving it a label that then people could rally behind, right? So what people don't realize, I think this is actually something that Willy Woo and Henrik are very good at explaining, is that it's never really one event. It's always a lead up of small little things that kind of start correlating together, start aggregating together that lead to that big event. That's what we define as liquidity. Yeah.
Yes, that's very important. I guess in the end, it's really like, it's not the narrative driving the price. Maybe it can sort of foster it as well and maybe amplify, but in the end, it's really actually the price driving the narrative, like prices first, Bitcoin or whatever crypto starts moving. And then you, as you said, you try to come up with some sort of narrative that sort of reinforces that, but it's probably mostly price, which goes first. That's certainly something. And in terms of liquidity, I think there's also a twofold perspective, right? I think when you mentioned liquidity, most people think, as you said, Bitcoin and liquidity like macro, Fed liquidity, net US liquidity, global liquidity, it's driving the Bitcoin price in and of itself. But then at the same time, I think it's also important, as you mentioned, vis-a-vis other altcoins, that Bitcoin, if liquidity in Bitcoin itself deteriorates, it's also a sign that maybe even if we see altcoins going and rallying for another weeks or something, that this will be short-lived because everything is still very heavily connected to Bitcoin. Like if liquidity is quenched and goes away in Bitcoin, then it probably won't be that altcoins will have just decouple and run on them for themselves just for a couple of months, weeks, or years even, right?
Yeah, absolutely. You can think of it like a reservoir, right? Like basically water flowing into a dam, like it's filled up and then slowly basically releases water, right? So that is a stable ecosystem. If there's more, let's say, water flowing into the dam, if that stops, it's only a question of time until the energy dissipates and there's nothing left. I think liquidity works in a at least in an anecdotal way, in a very similar way. So you want Bitcoin to be stable. I think there's no, at least we've never seen a alt season where you didn't have a stable and a basically strong Bitcoin, right? You don't want the explosive Bitcoin like we've had over the last couple of years, but it needs to be stable and it needs to basically be that reservoir of potential for the rest of the ecosystem. Think of it like oxygen for trees, right? So if you don't have the right amount of oxygen, trees will not grow. Same kind of concept.
Yes, that's interesting. Well, I mean, I would like to do some deep dives also when it comes to liquidity and how you guys ascertain or assess this, but maybe we can really start high level. And you mentioned that you could potentially show or share some slides or just like real-time insights into the cockpit that you've built. Yeah, maybe if we could start there and just see what have you built now and where do you start, like really fundamentally, so to say.
Yeah. So let me start with some of the basics. So I put together a little bit of a presentation, kind of thinking about what it is that we would have kind of touched upon. I think again, with liquidity being such a cornerstone to how we look at things, and I think also in terms of the importance that is required to really define this complex system that we call Bitcoin. I wanted to basically start there, and you can see my screen, right?
Yes.
Okay.
I can.
Super. So we actually mentioned this in our webinar that we did on Friday. For those of you that are interested, we have it posted on our SwissBlock and Twitter profile, and that's basically at SwissBlock and _. But what we basically touched upon there, and I think what could be interesting for today's conversation as well, is understanding Bitcoin from a accumulation, basically risk-taking, distribution, and risk-off type of environment, right? So there's basically four major so-called phases that Bitcoin can be in. And those are basically defined or subdivided by three main things that we look at, that we define internally as the risk-off signal, the fundamental index, and the liquidity network growth. And I'll go into what all of these mean in a second. Starting with the risk-off signal. The risk-off signal is a measure that we've built over the years that comes from our understanding of on-chain and the research that we've done on the Glassnode side of the equation, where we basically have isolated the major wallets or the whales that are active on a consistent basis, both as short-term holders and as long-term holders within the crypto ecosystem. So these are basically entities that are driving the price because they're the ones that are actually driving or changing the liquidity expectations within the ecosystem, right? So basically hodling or distributing tokens. And what basically happens in the evolution of the price structure of Bitcoin is that you have two types of situations that get created due to the activity of these whales. The first one is what we define as phase one, which is the type of environment where Bitcoin sells off in a significant way, but gets bought up very quickly because you have idiosyncratic demand or people on the sidelines that are waiting for a price reduction to be able to buy at a lower cost basis. Okay. And what's also important to note as a side caveat is that there's risk-off signal. What it basically does is that it takes all of those whales activity and it traces their average cost of acquisition. Why is that important? It's important because when you know the price that somebody bought at, it gives you a relatively good understanding of how sensitive they are to changes in price, right? So if somebody bought at 20,000 Bitcoin and Bitcoin drops from 120 to 110,000, those guys are really not going to care, right? Because their cost basis is massive, right? Very different if that accumulation happened at 115. But all of a sudden, if you drop to 110, they start to become very sensitive to further price changes. That can basically create a precursor to more sell-offs. That's what that risk-off signal is measuring. So whenever you have an inflection point like the one shown here, that is very positive because that's a buy the dip opportunity. Whenever you have a distribution phase, this signal tends to go further into the red territory. That basically tells you that it's a more prolonged distribution and risk-off environment because these whales are basically selling off their profit. Okay, or the tokens that they accumulate that are profit.
Yes, maybe if I quickly chime in here, it's like sort of the whales that you mentioned. This can be entities or private individuals, just like in general, big Bitcoin holders that over the years have also or always shown to be rather maybe selling the top or accumulating at the bottom. So
Yes,
that's sort of
correct.
why
Correct.
you then kind of indicate that these are important, right?
Correct. Exactly. So these are people that generally tend to sell the top and buy the bottoms. Yes, because they are entities that are potentially long-term believers in the framework. There could be people that are basically pension funds that are accumulating for the long run. These types of situations, right, that are de-risking and accumulating based on the macro environment, but also how strongly they see the Bitcoin narrative, right? So it could be many different reasons. Fundamentally, again, going back to the systematic approach, we don't really care, because the net effect of a Bitcoin being sold by a believer or a skeptic is, in terms of the network effect, is the same, right? So we care about the cumulative effect that a sell or a Bitcoin in profit has in a distribution or in an accumulation cycle. When it comes to the current environment, that's why I did label it as a 1, because it seems like what we're currently going through is a level 1 type of situation. I'll go through from a liquidity perspective why that's likely. Again, we don't deal in absolutes, and I think this is something that maybe is important for your audience to understand. We always deal with probabilities, right? So is it more likely or not that it is one or the other? Okay.
Maybe just one more thing, curious, because like there is this second 2 situation that we see here, the second red dot, and on the line below, when the risk off signal, like the frequency or like the line which moves higher, it's only really small. So does this mean not automatically, given that the higher this line goes, the higher the probability it is that we are in a sort of distribution phase? Or
Correct.
like what does this tell us, like if the line is moving ever higher, so to say?
Yeah, so the line moves above 25. So this is where you see that the line in the sand is basically blue to red is the 25 area. So we have an index gets normalized, right, based on that activity. And whenever you're above 25, historically speaking, it means that you're in a distribution phase. You're in a phase where these entities are selling their excess returns or are actually selling at a loss because they see more downside. Okay. So they kind of exasperate the process, right? So that's why we call it a high risk environment, because you don't know how much more selling pressure there is going to be because these whales are unloading, right? There's basically a very insecure environment. Now, this by itself doesn't tell you enough, and that's why you need to go a layer deeper. And that's where the fundamental index comes into play. And what the fundamental index is, it's basically a combination of what you see at the very bottom, which is a combination of liquidity and network growth. And what are those two things? We measure Bitcoin as a complex system, right? We come from it from a system and dynamics perspective, where what we care about really in terms of understanding if price is going to increase or decrease over time, we look at it as if it were an economy, right? So a ever-growing, stronger economy is always going to lead to positive outcomes. The opposite is also true, okay? So we kind of anecdotally look at it from that perspective. And what liquidity basically is that we measure the frequency of interaction between different entities. So how often do they interact with each other, and what size do they interact with, right? So that's basically what you would call liquidity, or in a more simplified way, velocity of money, right? So the higher the velocity of money, the more need there is of the ecosystem to use resources, which in this case is Bitcoin. The more you need a resource that is scarce, the higher the price, okay? The network growth, on the other hand, is the number of market participants that are present, that are interacting with each other, okay? So you can have a situation where that is extending or contracting, right? Depending on different factors. It could be macro, it could be that you finish an accumulation cycle and are going into expansion or distribution. It really depends on different outcomes. Now, you can have a combination of those things that leads to positive price. For instance, you can have a very active environment that has very few players, or you can have a very inactive environment but with a lot of players, right? That are basically gearing up to buying or interacting and exchanging Bitcoins, right? And that would have to be, in those situations, you would look at them in a kind of an isolated case to kind of make or identify how stable we see that environment being, right? Because at the end, if you look at it from a spectrum, the best setups for positive price evolution is very high activity with a lot of market participants very low activity with very little market participants would be a very bad environment, right? More likely to be a selling environment. So what we basically do then is from a macro liquidity perspective, we would combine those three factors together, and you would basically see the differentiation between the one and the two. So for instance, with the one, you get triggered, right? So there's definitely a short-term distribution phase, right? So with these larger whales selling their positions because they're trying to create profit or to reduce risk. But in the case of February of last year, right, which is what we're looking at here, you had a rising market liquidity and network growth. It was very different from what we saw in May and June of last year, where you had the rise, but simultaneously you had a fundamental index that was going through the floor, right? You had liquidity crashing, you had network growth contracting, right? Which is very bad. That means that the need or the scarcity or how much demand there is for the underlying scarce asset drops off. Same thing for what we saw basically in let's say the second or the mid to second half of January of this year. It's very different from what we're currently seeing. So it still remains to be seen how this plays out. But the first innings of what is currently happening seems to be more of a February type of echo and not a May type of echo 2024. Because you have rising liquidity and the large sustained market activity.
Very interesting. And how much is this based on on-chain indicators? I mean, when it comes to liquidity or network growth, because as far as I can hear, you're also factoring in, I guess, off-chain signals if you're looking at market actors, or is it all just on-chain what's happening with these actors? Or
yeah, so when it comes to structural analysis, we depend a lot on on-chain, right? And understanding what parts of on-chain are truly valuable. So on-chain is a wide variety of different things. But when you know what you're looking for, when you're trying to answer the question of, how liquidity propagates in the system and how valuable that understanding is to understand the ecosystem, a lot of that has to do, or the foundations of that is a on-chain analysis starting point, right? That's where we do our structure analysis. So it's basically twofold. One is the on-chain, the other one is the macro landscape, right? So how do we see the dynamics for Bitcoin price evolving based on macro changes? And I can go through that in a second once I show you the Hawkeye dashboard. We have a section there where we overlay on-chain, so idiosyncratic and drivers versus external factors and drivers that are macro driven.
Okay, I see. Very interesting. Yeah, I surely would like to double click on like what are sort of the best quote unquote on-chain indicators that you guys are factoring in. That would be interesting. But please go ahead if you have another slide to share.
Yeah, so we have a few ones that I'll go through them a little bit quicker. Because at this point here was very important to kind of set the groundworks, right, of the understanding liquidity. But then the subsequent question is, okay, so if people are selling, why they sell, right? And are we able to identify or kind of ascertain why this change in dynamic is happening, right? So, for instance, when you see a 1 and a 2, or in terms of the dynamic change, we see both of them as selling events, but one of them has a very fundamental reason for that selling. The other one is clearly just a risk-off type of selling, okay? And what has basically changed, and actually I need to slide down to the very end. We'll go back above. As I said before, right? So beginning, what we were looking at here as the phase one was right here in the February, right before the up ramp that we saw in Bitcoin. And the reason for that is that we are actually rotating from a Bitcoin dominated environment, kind of identified as from this orange block that you see here, in rotation into Ethereum. So we had a persistent period during that late January into basically most of February that it was a Ethereum dominant environment. Same thing that we are seeing here, right? So the selling that we're seeing is not a straight selling to go into profit or stable coins, but we're actually seeing a rotation. And that rotation has happened basically ever since we had the bottom in April and actually started to really ramp up into the beginning of May. And we've basically ever since really been in an Ethereum dominant environment, okay? Last year, it wasn't really as much Ethereum and it was really more driven by Solana, but we can get into that maybe in a subsequent discussion. But point being that the rotation that we're seeing now is echoing that a lot more, also because of the fact that we were also back in February 2024, rotating into an Ethereum-based basic narrative, right? Which is also what we're seeing now. And we have actually seen that persistently from, obviously you guys know now, because this has been happening for quite a while. This has been happening now in 3 steps. We are still expecting a 4th. We still see more upside in Ethereum as this rotation happens, right? So think of it like, again, going back to the original analogy of the reservoir, we've been filling up the big reservoir, which is at the top of the mountain, that big dam, and we've slowly opened that up. That has now been filling up the Ethereum reservoir, but simultaneously the amount of flows coming into the Bitcoin reservoir hasn't been as big as the one flowing into Ethereum. So we need that to stabilize again. And then as soon as the top Bitcoin reservoir, top of the mountain gets filled up again, we can then expect more flows to go downstream as a consequence, right? So that's exactly what we're seeing here. So you see that every time that you have this correction, you had a further move down in Bitcoin dominance as well. It's a very clear indication of rotation. In terms of liquidity, you kind of see the same pattern, right? You had, I forgot to post the axis here. I'm sorry for that, but this is again the February and March of 2024. So early 2024, you saw very strong liquidity in Bitcoin that was rotating. It was also very strong in November of last year, but already weaker. You see the weakness, that you start to see the degradation. And then this time around was actually a lot weaker compared to those times. So the money moving into the crypto ecosystem has been split into multiple areas, not just Bitcoin. And you can see that as well by looking at Ethereum. So even though Ethereum hasn't outperformed Bitcoin per se in the strong months of 2024, it was roughly there, kind of, but it was much more evident in this most recent move. In Solana, it's less the case, yeah. Yeah, right.
Okay, sorry. Yeah, just quickly, in terms of these two liquidity indices, again, this goes back to the velocity of movement of either Bitcoin, Solana, or Ether, as well as like how many people or market participants are actually present, you know? So that's exactly assessing this again that you were explaining earlier, right?
Actually, it's slightly different. So just to make a distinction, thank you for actually asking that question, because it is an important one. What we're looking at here is the ecosystem itself. So this is a macro analysis. What we're interested in here now, as I said, we're now kind of double clicking on only the liquidity. Because as I said before, the thing that matters the most is liquidity. And that is not just the activity or interaction between the market participants, but also the money flowing in. So the amount of basically water flowing into the Bitcoin and the Ethereum reservoir as it flows down the mountain, okay? And this is what you're measuring here. So here we're looking at the amount of actual dollar-denominated flow that comes into the ecosystem through ETFs, right? So we have our ways of defining that. Again, why on-chain is super relevant and why Glassnode is the number one, I think, data provider in the space for those that are serious about this type of data, because it is the most predictive data for price, because you're able to actually measure dollar amount flowing in and out. The person actually pioneered this is Hugli. Hugli has been a pioneer and is the hands down the best resource for understanding of this type of liquidity to flow in and out of the ecosystem. We've basically been able to build on top of his work, and that's basically what this is. You also have it for Solana. Why Solana? Because it is a relatively important ecosystem to keep in mind, because it does matter. It does take some of the mind share, as you can see here. Not as much as it did back in 2024. Remains to be seen how that plays out. We still think that there's going to be a meme part of this future rally that is coming in the next couple of months, and I think Solana is going to have some level to play there as well. But I don't expect it to be the absolute dominant narrative that it was last year. It doesn't mean that it doesn't outperform Ethereum in a dollar term, right? It could absolutely do that, but it's not the thing that is actually absorbing liquidity.
Double clicking on this again, real quick. Like when you say dollars flowing into any network, be it Ethereum, Bitcoin, or Solana, are you referring to something like the realized cap? And if so, could you maybe quickly explain, or how do you measure?
It's not realized caps. It's a combination of different factors. Like this is where obviously we go a little bit more into the secret sauce, but it's basically if you had a way to measure or get a proxy to the amount of dollars coming into the system. So how much are people, like the dollars that are basically that were not part of the crypto ecosystem, that were not a stable coin before, when stable coins get minted, where's that money flowing, right? Does that make sense?
Mhm.
That's what we're measuring here.
Okay, and I guess this is, but also dependent on off-chain data in the end as well. It's probably a mix, right?
It's a mix.
mixture of
It's a mix, but it's mostly on-chain because at the end, remember that exchanges, even though they have a lot of money, obviously that is on their wallets. Remember when stable coins get minted, they get sent to and from exchanges, and they also a lot of times they send stable coins to and from each other, right? As they basically lend and basically borrow capital, right? So that's also what we're looking at here, to be able to differentiate between that, which is already part of the ecosystem, versus money flowing in and out of the ecosystem.
Okay, I see. Yeah. Because that's probably the $1 trillion question that everyone is asking. Like, how can I assess and measure really the money that's flowing into Bitcoin itself? And it's not by just looking at market cap, which goes up. It's probably something which is more upstream, so to say.
Well, that's why we have obviously being the founders as well of Glassnode, we have the additional benefit of being first movers and having had 10 years to perfect, right? So, and for those of you that are listening in that are interested in getting access to this data, you can directly talk to Glassnode.
Yes, interesting. Yes.
Glassnode and also SwissBlock, if it's this specifically, but if it's about understanding, flows in and out, understanding profit loss, understanding how whales actually interact and how they drive basically the distribution and the accumulation cycles, that's really Glassnode. I don't think there's anybody better than that. Yeah. And yeah, just to kind of finalize, I'll quickly go into macro as well. I need to, maybe in 2% time, I need to quickly charge my laptop. Really sorry for this. But this is basically what it looks like. So combining all the different things together that we looked at before, we basically combine that into two major sub-elements as well. So the blue areas that you see here are the liquidity expansion phases, right? So combining all the parts that we just discussed before into the blue areas, and then adding two additional pieces of information that are very important as the pillars to understanding the crypto ecosystem of the structure, which are the phase analyses and also the actual aggregated impulse. And I'll explain each one in a second. So and also, by the way, so as a caveat, we also highlight which ecosystem is basically behind the drive of that liquidity, right? So clearly you see that in 2024, it was mostly Solana, even though I think Ethereum did perform well. Solana definitely outperformed. For now, Ethereum takes the cake. And what we basically do here is that we track that liquidity rotation between different ecosystems that we map as Bitcoin strength, Ethereum, large, mid, and small cap. As a caveat as well, every single alt season tends to end in a small cap driven round. You see that over and over again. It never is exactly the same, but they rhyme, definitely rhyme. And they are also different, by the way, if they are Solana driven versus actually Ethereum driven. There's actually very interesting differences in types of alt seasons. But what we also track is what we call the aggregated impulse, where we basically we take the top 350 liquid tokens in the ecosystem, and we basically look at their individual price microstructure. And through different algorithms and indices that we've developed in-house over the years, we basically identify when the price shift that is happening in the structure is something that is persistent or not persistent. So is what I'm looking at exponential, or is it just an outlier that is going to mean revert, right? So is it just a pump and dump, or is it something that is actually shifting? And that is important to understand, especially on an aggregated level, because that is a precursor to the alt season. So whenever you have a combination of strength in Ethereum with these things firing off, especially on an aggregated level, that is exactly how we define alt season. So specifically, whenever it's at above 25%, whenever you have an aggregated impulse that is above 25% with a basically liquidity flowing away from Bitcoin, that is how we define alt season.
Mm-hmm. Mm-hmm. Okay, I see. Interesting as well. I mean, if speaking about alt season, I might be interested in what are some of the other ingredients which we need for a full-on alt season. Obviously we need this outperformance by a clear leader, which currently seems to be Ethereum. We mentioned that we need a stable Bitcoin price, because if Bitcoin prices is just collapsing, then altcoins have a hard time outperforming as well. And then I guess I think I seen you mention somewhere it's ecosystem flows as well that need to be, for example, total value locked, with other layer
Yes.
one or blockchains. And then a rising altcoin impulse is something that was mentioned as well. Could you maybe also double click on this? What are we meaning by a rising altcoin impulse? What type of impulse is that?
Yeah, so the rising altcoin impulse is what you have here. That's the aggregated impulse. So what that basically tells you is that you have not only a shift in liquidity, but there's an actual effect in the price. You have things moving not independently, but together, right? So alt season is always defined as a general rotation into risk on. What does that look like? It looks like a flow that basically triggers a bunch of different narratives that simultaneously move, right? It doesn't mean that all boats get lifted like in 21, but you have then different dynamics, usually led by meme coins, because that's the most extreme version of risk on, right? Memes are the most risky aspects of the ecosystem, but there's basically a phasing effect, right? So right now, for instance, and I'll quickly show it after it's in the dashboard, but it's beta, Ethereum beta. What that basically means is that it's things like LDO, Aave, Circle that are really beginning to move, and you see them as positive impulses as well. For those of you that follow us on the Vector series, you clearly saw that already last week. And the reason that is important is because those are the absorbers of that capital. So they become the things that then lock in higher TVLs that then create a flywheel into how people basically take on capital, they invest, they take a risk within the ecosystem, and that then creates more value downstream. Okay. Yeah.
Is this also the difference that you meant when you mentioned that, like, if we have Sol or Ether as a leader, that these altcoin seasons, they just develop differently in the sense of, like, you have either, if it's Ethereum, we probably have Ether beta plays that you want to look at, and with Solana, it's more the coins on Sol or the tokens on Solana, or what did you mean by saying
Correct.
that, like, these altcoins look, or the alt seasons look different?
Yeah, exactly. So it's exactly that, right? So it always comes down to taking 2 steps back and double clicking on the liquidity as well, right? So how do people spend the thing that is increasing in price? When it comes to Bitcoin, I think it's very well understood that it's a store of value within the ecosystem, right? So it's kind of the reservoir for everything else, right? It's kind of the pent up opportunity cost of capital that flows into the system that gets distributed to other things. Ethereum is the second best. Okay. So even though Ethereum is not seen as exactly the same level or quality of collateral that Bitcoin is, it is still a high quality collateral within its ecosystem. And being that it's the second biggest ecosystem after Bitcoin, it has basically store value properties. So the higher that price goes, the more people save in the thing that has more value, and that creates a positive feedback loop into other things that are Ethereum based. When it comes to Solana, it's again second best to potentially Ethereum, but it's not as good as Ethereum or Bitcoin. So the more you go down that kind of risk, the less
Chain,
the underlying assets that is basically the lowest common denominator of that ecosystem. So Solana for the Solana ecosystem, Ethereum for the Ethereum ecosystem, the less it's seen as a store of value, but actually a risk vehicle, right? So with Solana, it's clearly speculation, right? So because it is speculation also means that the alt season will not last as long, and most likely the profit taking is going to be more violent. And that is exactly what we saw, especially in January, February, because a lot of the pent up energy was locked in Solana, not in Ethereum. This time around, it's different because Ethereum is a higher quality of value. For those of you that have studied economic, economic history, I guess, is a good way of putting it. It's basically there's an effect where basically good money crowds out bad money. Okay, this is actually a very well understood concept, and it's exactly what this is. Okay.
Okay, I see. Interesting.
Yeah.
Yes.
Last but not least, it all ties down to macro. So Bitcoin, even though it's a very new macro asset class, it is a macro asset. And it's in the best of its forms, because again, it is a liquidity transfer mechanism. It is super sensitive to changes in expectations of liquidity. What that basically means is that it's sensitive to changes in that expectation. For those of you that have seen the M2, we use a variation that is more linked to actual I think it's G7, G7, basically central bank liquidity on the balance sheet. Okay. And you can see very clearly that October is where that seems to be more problematic in terms of expectation of future liquidity. For the time being, we're still in that up phase. Even though the biggest part of that phase has happened already, we are still in that up phase as we currently speak. So that means that there's still tailwinds, even though they're not as strong as they were in the last 3-4 months. There's still tailwinds before they become headwinds. And when it comes to recession, so how does that lead into? We're always looking for recession signals, obviously, because that's the biggest handbrake on future liquidity expectations or short-term incentivizers of liquidity expectations, because banks cut rates, they inject at least short-term, they ease short-term in terms of kind of the pressures that are in the credit system, right? We are very closely looking at the 10-year, right? Especially when it comes to the actual inversion or basically the reduction of that 10-year. We see right now it's compressing on the trend line, which is not great. Very similar to kind of what we saw back in 2007. So we're very, very closely monitoring this. We're also big believers, again, Bitcoin being a transfer mechanism in liquidity, a canary in the coal mine for liquidity, right? It's going to do very well as it expects rate cuts to happen. As soon as rate cuts actually happen and they start accelerating, you're not going to see outperformance in this asset class. Because again, rate cuts accelerating is a sign that the system is broken. And at that point, there's going to be an absolute liquidity crunch. We're probably going to see sell-off in gold, Bitcoin, and all of these kind of risk-on assets as people consolidate back into dollar. So I think a lot of people are going to get caught up in the wrong side of that play because they see dollar weakening. I think the dollar, as Henrik Zibert has stated many, many times. By the way, these are all Henrik Zibert's graphs. He's a absolute must-have when it comes to macro understanding of cross-asset structure. He's been saying this for a long time. I also believe that we're going to see stronger dollar in the future for the time being. Exactly.
Yes, very interesting. I did an interview with Henrik as well, which I will be publishing, I guess, over the next 2 days as well. So, I mean, this is all very interesting. But if we stick with the thought that like the rate cuts are still ahead of us, and we might not be at the cycle top yet, and there is another altcoin season coming. So the question is sort of, what is your belief there? Where could some type of top be at? And then also, is it really the case that because Ethereum is now really the leader among altcoins, that people, if they want to outperform Ethereum further down the line, they will have to look at Ethereum beta plays, which is probably the most likely candidate, for some type of outperformance? And then maybe the last question, then also, how do I know if something is really a high beta play right now? Because Ethereum has nowadays thousands of assets on top of its blockchain. And so the question is, which one will be in a beta play that will do well, and which one probably is just on Ethereum, but will not catch any of the action, so to say?
Yeah. So, I mean, we have to maybe peel back some of the layers of that onion, right? So the answer to your question is, I think, a multifaceted answer. When it comes to Ethereum, that rotation of capital, I think, happens in every cycle has been different. So we've been around since late 2014. And back in the day, let's say the deviation of capital was about finding the next Bitcoin, right? That is obviously not the case here. I think Bitcoin is super established. I don't think there's going to be a flipping. And if there is, it's not going to be a lasting flipping. Again, going back to the concept of store value, right? People see Bitcoin as a store value. It's the most valuable thing, period. It's very difficult to change that, right? And by the way, the mechanism, for those of you that are interested, it's called Glassnode's law. So people will always spend the least valuable thing, and they will always hoard the more valuable thing. It's just a human condition. When you look at value and how you define value, that is an important tenet of value. Okay. This time around, we're kind of resurfacing a narrative of, let's find the next Bitcoin. Let's find something that is more valuable than Bitcoin, because you also have a new investor class that is coming through that wasn't part of that value definition back in the day. But if I had to guess or make an assumption, I would assume that we would end at the same point. People just realizing that it's Bitcoin, and that Ethereum is really a technology layer, like Hugli has stated many, many times. I think he coined that concept. I fully subscribe to it. Ethereum is really the technology layer. It's not the value or basically the savings layer, right? The collateral, the pristine collateral layer. I think that's already been established. This is to some extent that for its ecosystem, but not for the broader market, I would assume.
Cockpit now, right? Of
This is the actual
Hawkeye that
cockpit
you mentioned.
Exactly. So this is for research and kind of very advanced analysis, right? Obviously, you need a certain level of understanding to be able to use this effectively, but I'll give you kind of a quick elevator pitch version. What we basically track is exactly what you said. We care about Bitcoin because, again, Bitcoin is the oxygen, it's the lifeblood of the ecosystem. A stable, strong Bitcoin means likely alt season when you see rotation. The opposite is true if you don't have a stable Bitcoin. So we always look at Bitcoin first. Oh, sorry. You can still see it, right?
Yes, I can see it, yeah.
Super. So as you can see, we're still struggling around that 10K area, which is a massively important inflection point. I'll go into that maybe in a second if we have time. But what it's basically telling us, and this has, by the way, been the case pretty much since mid-August, is that we're in an environment that is Ethereum dominant. Bitcoin fundamentals are still neutral, skewed towards strong. So we're still seeing a lot of flows and a lot of market activity on that area. And we're also seeing a reset of the alt impulse. And I'll explain in a second why that is important. But when it comes to the actual environment, we're in a tactical and in a downtrend environment. So it is flipping between bottom and downtrend because it is trying to find that footing, especially on the Bitcoin side. It is still not dominantly clear if we have more let down or this is basically it, right? Again, liquidations are a big factor here. There are going to be things that are just unpredictable. But from a structural perspective, we are definitely getting closer to the culmination of whatever this move is. And you can see that again, kind of tying it together to what we talked about before. You very clearly see that with the actual risk-off signal, right? So if you go maybe back to 2023, give you the majority of, let's say, the cycle that we've currently been on, and you can clearly see, just leave it a little bit of time to load. You can see that we are, again, slightly higher from the image that I showed you before. So we're at 32. So in that critical inflection point area, like I mentioned, similar to what we saw here, also similar to another couple of events that we've had. It still remains to be seen. When it comes to the actual structural elements, so these are systematic strategies that are trend followers that are tracking different parts of the, basically the momentum and the trend that is in the ecosystem, as I mentioned before. We're always trying to identify trend when it is truly there, right? So when momentum and volatility are skewed to the upside, not just volatility, which a lot of people misinterpret as trend, which is also very dangerous. But we did disambiguate those two things. We see that we have been struggling for quite a while. So the actual real top that we measured from our system perspective was actually on July 16th, actually. That was the actual top. What you've seen here was actually a paper-driven top. And I think Willie was talking about this at length as well. This is not a fundamental-driven top. And I can actually show you this as well here. And if you look at fundamentals, you see how we had a drop-off ever since here. We did have a recovery, but that was more due to the actual market growth, not the liquidity, right? So you had a lot more speculators come in, not really the liquidity. The liquidity was right here. That was when the top was. You see that? That was the actual top.
Yes,
liquidity.
Exactly. Yeah.
Yeah. This is super important to understand. This is what drives markets, right? This one here, you can see there was actually a lot of growth in network activity. So late long positions, late speculators that were moving into the market, but they were not really driving the liquidity side, right? Kind of similar to what we saw also here. You see how the real top in December of last year was actually the 16th, right when liquidity, or sorry, not the 16th, the 26th of November. So the actual top was around 98,000. That was the actual liquid top. What you saw after, that was all speculation driven. You see how liquidity dropped off a cliff as new market participants were moving into the system. So that deviation is the ticking time bomb. So that's when the countdown clock basically starts. And then we use our systematic overlay to basically tell us how to then navigate that from a risk perspective. More importantly, you see it here, if I simplify it down, right there. That was the top. So 97, roughly. 95 to 97. That's when you would start to de-risk, right? And it doesn't matter at that point if you don't take the last 10%, because I mean, if you look at the cycle when the trigger happens, you would have bought at 62.58, right? That's a pretty big upcycle.
Yeah, pretty big upside. Yeah, that's very interesting to see like the confluence also in between these different indicators that you're showing me here. When it comes to the cockpit itself, you mentioned that you can also assess sort of with the altcoin, the beta plays again. How would that work with the cockpit?
So let's go a little bit deeper, right? So let's look at the narrative. So what is the narrative that is most dominant? So here right now, we're still working on, this is still a beta, right? So we're working on the toggles, but we're going to be able to identify the major narratives that we care about, right? So we use a specific taxonomy, a taxonomy that actually, I think was actually pioneered by Bitcoin Swiss. So for those of you that are interested in Bitcoin Swiss, we have a very well researched and explained taxonomy of how to define different narratives and ecosystems for those of you that are interested. So we subscribe to their way of thinking about it. But roughly speaking, we're looking at ETH beta, right now L2s, DeFi, and RW. So those are the leading narratives and have been interchangeably so for the past, I would say probably three weeks or so, roughly. So LSD is ETH beta, which is mostly ETH, L2s, and then also RWAs. Right now it's ETH driven, which tells you that a lot of the momentum and the rotation of capital that is being absorbed by Ethereum is going into Aave, into LDO, and things of that nature.
But it's interesting because they're now judging from what I'm seeing here, like the ETH beta narrative is already at the top of its range, which would have you believe that maybe this narrative has already sort of lost its like fundamental steam and might reverse, or
it depends.
Or it can
right?
only go on for a couple of weeks, I guess. Yeah,
it interchanges, right? So remember that we're looking at a ranking here. So if you want actual strength, we would have to again go back into the snapshot, and we'd have to look at the actual driver. So is the strength that we're seeing in the narrative, what is it driven by? So we have that classified in three different ways: mean reversion, breakout, and up beta, which are roughly defined as mean reversion means that you have major capital rotation happen. Okay. So if you look at the last week, you clearly see that the majority of the value was driven by mean reversion plays. So things that are very strong as capital rotates, again, ETH beta, right? Is a way of saying that. You have breakout and up beta. So whenever you start having Ethereum that breaks all-time highs, you're going to see breakout outperform big time, because you want to see things that are actually close to the resistance level that are going to punch through, right? The way that we basically filter through that, because obviously there's so many alt plays, is we call it the asset screener. So here we would basically look at exactly what we looked at before. So I would basically be looking at things that are basically, let me look at, let's see, large caps, right? Because we know that I know that we're in that part of the cycle, right? So I'll have a little bit more of information. We look at mean reversion. I would care about things that are in recovery right now. So this is what it basically spits out. And what it's basically telling me is that these are the short list of things that I should be looking into. So XRP, Doge, Stellar, Sui, Bitcoin Cash, Hedera, Hashgraph. If I look at the mid caps, again, maybe just to give a little bit more of a context, let's look at Ethereum ecosystem plays, ETH beta. Second, liquid staking as well. So if you reduce it down to those, you clearly see that on the mid cap area, for things that are strong in mean reversion, you need to look out for Curve, Shiba Inu, Uniswap, and Optimism. Those are all in recovery. If you look at warming up, you don't really have anything yet, but they're all in recovery. So they're all priming themselves. As soon as Ethereum starts showing strength and it goes over all-time high, these plays are going to do very well. Okay. Same thing with these plays that we just identified before. Right here. Right. So these are all mid caps. So when it comes to, I would have to reset the filters here. When it comes to large caps, you would look at this here, right? So specifically, Hedera, Hashgraph, Ripple, Stellar, Sui, these types of plays. You can see the strength here. What I would look at for confirmation that we have our performance is the impulse. So what you see here in the middle. So as you can see right now, there's no positive impulses. It means that we're in a resetting environment. To give you guys the context very quickly, what that basically means is that we are in a We're in an environment similar to what we saw here. So basically mid December to January, similar to what we saw before the first peak. So basically September, October of 2024. Similar driver when we saw basically back in May of 2024. Same thing with February, right? February keeps coming up as a contender, well, to explain the type of environment that we're currently potentially looking at, right? So this is something that we would need to track. So as soon as that impulse starts moving, what we then do is we go into the asset screener. We filter by what I just showed you before. Yeah. Okay. So I go into my main setup in this case. That's something things that I track, right? When I look at breakout, for instance, in my specific case. And once I identify the tokens that are really strong in the recovery area, I would then go into the asset screener to then actually start comparing, right? So what I would care about here, specifically, obviously, because we're talking about Bitcoin and Ethereum strength, I would look at that relative strength. So how is the impulse of the two moving? You see very clearly here that Bitcoin has not been dominant. You see the massive outperformance of Ethereum, and also the fact that it has had positive impulse this entire way, right? Starting in May of this year. Bitcoin had a slight impulse move at the very beginning, and it's never really had it after, right? So I would basically start looking at very detailed analysis, and I would make a decision based on that. Look at the CVD as well, right? This is again a relative perspective on the CVD, but you see that,
what's the CVD? What's the CVD?
It's just basically kind of, let's say, put it specifically the spot demand that is there, right? The volume that is on the spot side, the demand volume. Yeah.
Okay, I see. Yeah. No, it's very interesting. We've coming up on an hour here, so I think we probably have to sort of come to a close, but it's so impressive what you've built here, like this whole systematic framework. Maybe two more questions, so judging from what I can seeing currently, and what you're showing me, you are of the belief that we're sort of towards late stage cycle, but there's going to be some top still ahead of us. Is that sort of a correct assessment in your view?
Yes, right. So again, we'd like to take things one step at a time. So it's about understanding how the framework moves. But if you look at liquidity, which is, I think, again, the only thing that we can use to really gauge future potential on the price side, it does seem to culminate on that October area. So potentially September for Bitcoin, maybe October for Ethereum and alts. That would be kind of the higher probability outlook that I have right now. Again, that can obviously change, right? So nobody can predict what the Fed is going to do. It's possible that NVIDIA earnings are actually better than expected, maybe completely the opposite of what, there's so many other factors that can play into this that can shift timelines forward and backwards. But again, and just to kind of highlight this point, single events don't drive the narrative, the structure. Liquidity does, right? So if there's massive changes in liquidity, that's when we start listening and paying attention.
Yes, great. That's very, very interesting. And I guess for people who would like to use this framework, can you just maybe, say something to this? How can people access this? And also maybe where can people follow you and SwissBlock in general?
Yeah. So for those of you that want to actually have access to the actual framework, we have a very limited group that we're going to be working closely together with, that we get full access to on the framework side. The reason for this is that we as a fund are actually rotating more and more into non-crypto related trading strategies. So a lot of the tools that we use for discretionary trading over the last 8 to 10 years, we're now packaging together into a high touch point service that is limited right now to 10 different seats. But for those of you that are more interested in just understanding liquidity, there's basically two ways that you can do this. One, we have a Substack newsletter that we give out and with Hugli on Substack called the Bitcoin Vector Lite, where we basically look at only liquidity. We look at how liquidity structure changes and how it's rotating into things that are not Bitcoin. So I think that's a very good place. There's also the actual product side on SwissBlock. So it's basically swissblock.net/products /products. We have the full suite. So we go all the way from Hawkeye demos. So for those of you that are actually interested in signing up to a demo, you can do that very quickly here. It requires you to fill out a couple of pieces of information, and we'll basically reach out to you. We have Hendrik's macro economic ledger, which I think is very valuable for those of you that are interested in general long-term liquidity positioning. I would highly suggest that. And then we have the vectors. The vectors are basically deep dives into the Bitcoin liquidity and risk frameworks. And also we have a altcoin vector version as well, which is the specific value add on the altcoin side. So Ethereum, Solana, and everything that is not Bitcoin, basically. So you can have a deeper dive. It explains fairly well what those are. You can download sample reports, and you basically have two different versions. You have a base plan, which is only the reports. It's basically one report every week that gets delivered through email. And then we have actually a more specific version that is basically the advanced plan. So here we not only give you updates on how things are moving based on the framework, but we also give you the alerts. So specific things. To give one example, the top in August, we were able to identify fairly well with this setup that I mentioned before. So we have a trigger, so an emergency system that we use on the systematic side as well, that gives you an understanding when price becomes exponential to the downside, right? So these are tail risk events that we call them, and they give you a general sense of how things are moving and when these kind of risk events are being triggered. So for those of you that are looking for something more actionable, the advanced plan is more in that area. And then for Substack, just very quickly, you have basically this one here. So it's a Bitcoin Vector Lite, is what it's called. You have basically
where people can also sign up, right?
Exactly.
Okay. Yeah, very interesting. I definitely will link to some of the stuff that you were presenting here. So yeah, Jan, thanks a lot for taking the time again, sharing all these insights with us and giving us these free explanations. So that was very interesting, and wishing you the best going forward. And let's see what the market brings next in terms of altcoin season.
Sounds good. Thanks a lot for having me on. And yeah, so we're obviously going to be updating people as we go. Also, Twitter is going to be a place. So maybe in a couple of months' time, we can touch base again to see where we are.
That would be great. Cool. Thanks a lot. There's
Thanks a lot.
A lot more to discuss, I guess, in the end. But this is always the case. Just too many information if you are in crypto and markets, I guess. But amazing. A good problem to have. Okay.
Absolutely.
Thank you.
Thanks a lot.
Have a good one. Thank you. Bye.